It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. If you want to follow along with the show, head on over to cmegroup.com/TWIFO, TWIFO/TWIO will also do it. That'll get you to that report. Then in that drop down, you want to go down 4 slots to equity indexes. Then in product family, you want to go to US Index E-mini. Then after that, it's an embarrassment of riches. We could start wherever we want. Scott, it's obviously been an interesting start to the year in the equity markets across the board. We haven't talked to you on this show since early October of last year. So a lot has happened since then. What's been catching your eye and lighting up your tape in the world of equity, sir?
You know, a lot has happened, but when you look at just kind of the number of where we are now compared to where we were back in October when I was on last time, it almost seems like, we're near the same place, even though, it feels as if we've had gyrations and sector rotations and volatility all over the place, which we have had. But truth be told, we're kind of in the same place here. I think vol is definitely higher now than it was back in October, and we're definitely seeing some extended vol going into tomorrow and even next week in ES. And I think that's, probably rightfully so, just given the landscape of what we may get eco data wise. Obviously, geopolitically, there are some things out there. So, ES has been, in implied vol in the upper teens, actually nearing 20. And, that is definitely elevated.
I know you folks have a lot of interesting trades you're always putting on over there at Prosper. Anything been catching your eye in the world of the E-mini lately?
It is that volatility. And when we saw a dip about a week or so ago, we had actually bought some put spreads. And you know what? We're looking to add on to them as vol keeps going higher. When I say add on, I mean selling something against it, because vol has popped quite a bit. ES is near the same place, maybe a tad lower than what we had bought, and our duration was out to kind of the end of March. But I think that we're getting to a point, at least in my estimation here, where vol is getting a little toppy. And even though people may say, "Oh man, we've seen vol much higher than here," we don't see it trade in this range that it's in for typically a very long time. And I think it's been there maybe a little bit too long. But obviously, something happens geopolitically, we can see that change real quickly.
Well, speaking of stuff happening, a lot has been happening out here in the world of the E-mini. In fact, you would never know it's a truncated holiday week by these volume numbers. Already 2.7 million contracts, so they're making up for some lost time out there. A pretty action-packed week. As you might imagine, listeners, a lot of that action aggregating in the contracts that are expiring today and expiring tomorrow. It's all 0 day. It's all near dated all the time in the equity world. And as we're recording this today, listeners, we are seeing most of those major equity indices come under some heat. We're selling off about 0.5% in most of the major indices. We're seeing our old pal, VIX Cash, as Scott alluded to, getting frothier, vol getting back up above that 20 handle, which is certainly an interesting psychological level in the world of the equities. Scott, you mentioned put spreads were drawing your attention over there at Prosper. It's kind of interesting because that's also what caught our eye out here in the E-mini this week. Again, there's a lot of stuff flying fast and furious around the 0 day strikes, listeners. But actually, if you go out a few weeks, all the way out to week 1 March, I know it's heresy to go all the way out 15 days, listeners. But that was one of the larger trades of the week out here this week. Looks like somebody really had an eye, Scott, towards the 6,600, 6,500 put spread in March. It traded 9,500 times on Tuesday. It traded about a couple of thousand times yesterday, and it going up about another 10,000 times today. So you're talking over 20,000 contracts going up in this put vertical, which looks like it was trading for around $10 on average there, Scott. So I don't know how far out you were going or what strike range, but how does the 6,500, 6,600 put spread in March for about $10? How does that float your boat, sir?
Interesting, really interesting. So my duration was longer. My duration is actually out to the end of March, and we were looking at the original spread we put on was 67.50, 66.50, and looking to add on selling a lower put spread. So actually selling a spread like this could be a real nice hedge against the long position that we have. I'm not sure I'd be a seller of this spread, this 6,600, 6,500, without having something else long against it. Sure, it's expensive, but I think you gotta have something in the tank, Mark. You know that.
Yeah, it's just kind of interesting. Everyone's got put spreads on the brain in the E-mini right now, Mr. Scott. You are not alone. The other thing a lot of people have on the brain right now in the world of equities, Scott, is this emerging, call it what you will, flight from AI, rotation out of large caps and into the small caps. So a lot of people are paying attention to all things small caps as well. Is this something you're noticing and potentially trading over there at Prosper so far this year as well, sir?
Yeah, we definitely look at RUT and we look at IWM, but when we're looking at kind of this sector rotation, it's maybe not necessarily out of AI tech to small caps in general, but to some of the staples. So that's where there's been some interesting trade that I have seen, but I know that in the rut, I think it was in June, right? There was a big put spread that traded that somebody bailed out of. I want to say it was 2,500, 2,000 put spread. So it's the volume is not just limited to the ES. It is across the equity space, and it's interesting to see some divergence in the NASDAQ and the RUT versus what we're seeing in the ES.
Yeah, it's been a very interesting stuff out here of late, and that continues again this week, listeners. If you want to head on into the Russell 2000 on that report, you'd see it's actually a decently active week there as well. You wouldn't know it's a truncated holiday week. We're seeing about the same amount of volume we would expect to see this time of the week, a little north of 20,000 contracts. So interesting stuff out there. By the way, if you're wondering vol-wise, we're just talking about E-mini vol getting a little bit spicy, getting north of 20 handle. Small caps usually structurally more volatile. At least that's how it's supposed to work. And if you're wondering what is small cap vol, if you go out about a week or 2 weeks, it's about in the 25 range. So 24 to 25 range. So some premium, not as much of a premium as perhaps you might expect, given how much movement we're seeing out there in small caps. And as Scott alluded to, everyone apparently does have put spreads on the brain this week, because that was the largest trade we noticed out here in the small caps this week as well. Went up yesterday almost 600 times. So you're talking almost 1,200 contracts total, which again, you're doing 20,000 contracts in a week. 1,200 is a large trade. And it was the June. So going all the way out to June, which again, an eternity in the world of equities these days, listeners. The 2,500, 2,000 put spread. It's like somebody took it off nearly 600 times on Wednesday. So again, kind of a wide one. We were talking a pretty tight put spread in the ES, and now we transfer over to small caps, 500 handles. That's a pretty wide spread. You might say, why even bothering with the 2000s? But there's maybe some method to the madness. I hadn't had a chance to dig in and find some prices out here. Obviously, it's going to be a pretty wide spread, so bear that in mind. But interesting stuff out there. So apparently put spreads on the brain in the world of equities out here this week.